The model that's needed, and the one that I guess is still needs to be built, is one that has a balance, that has a public floor, a first pillar, which is a sustainable public system that doesn't depend on just taxes, pay as you go, but it is funded. You need an employer pension system that is funded, and then individuals have to take responsibility.
Whereas one can compare capital market development that has happened with advantages and disadvantages in the so-called Western world and Australia, and there are lessons to be learned, both to be followed and mostly enough of them to be avoided, one can make the case that the banking industry and corporates, i.e. intermediaries, end users, and end investors, can be definitely trying harder to create the right product for the pension fund industry.
You probably need to even have a mandate, a mandatory system to successfully save for the old age. We need to use the capital markets to as a means of investing and saving for the old age.
If you think of someone starting work at age 20 and perhaps working 40 years to age 60 and then living for another 20 years, if he wants to have a good standard of living after retirement, he's going to have to save, or his employer is going to have to save, about 20% of salary.
Just out of curiosity, how many people in the room actually put away 20% a month? Raise your hands. How many people have actually put away 20%? Are you lying to me, sir? You're the only one.
We're at a turning point, in my view, in terms of food and agriculture. About 5 or 6 years ago, I went to the ADB to talk about this in my previous job, and was basically told that at that stage, agriculture was viewed as a sunset industry. Suddenly, we were then confronted with the 2007-2008 food crisis.
For the last 4 or 5 years, since the first global food crisis around 2007, 2008, we have seen a lot of global conferences, seminars, national government commitments to spend more money on agriculture, on food security. Too many talks, too many commitments. But we have to walk these talks, these commitments, to make sure that they will truly move to implementation, to actions. Even today, there are still 870 million people who are suffer from hunger, and almost 2 billion people who are suffering from malnutrition.
The bottom line is that from an economic perspective, pretty much there's a range of numbers. I've seen it as low as 2%, and I know, because I was involved in it in Guatemala, the number was 11% of GDP lost per annum due to undernutrition. And so I don't say malnutrition including obesity, because that's a whole nother price range in terms of impacts on healthcare costs.
Australia has the capacity to feed in excess of 500 million people. But what we must do is make sure that we are aligned and we have a government that puts policy that aligns our ability to execute. Because one thing is for sure, that we can clearly see the need for food security. But what we need to do to be able to take that now to the world, not to feed ourselves, is to make sure we can align the right policies to structure markets and the development of our products too.
If you look at particularly East Asia, between now and 2021, about 50% of the growth in imports of food is going to come from East Asia. But only about 25% of the growth in exports of food is going to come from East Asia. So that tells you there's real supply constraints within this region.
Any efforts around improving the value chain in the middle section, particularly focused with perishable items like meat, and investments around this value chain, which includes logistics, includes cold storage, includes biotech, includes specialty feeds for different breeds. This is, I think, an area that offers a lot of potential.
RMB business provide the alternative for foreign corporates to help them reduce the conversion cost, hedging the exchange rate risk, increase the revenue, and also enhance their bargaining powers.
At a broader dimension, it's not just about dim sum bond, it's not just about CNH, it's about the entire development of Hong Kong as an offshore market in all encompassing, and an increase in depth and increase in liquidity.
The renminbi products, we have pretty much a complete range. That doesn't mean that we have a deep and rich range, because nevertheless it's still very shallow, because so far what we have depended on is for China to open certain avenues for us so that we could create products, and on the back of those products, the renminbi in Hong Kong, or wherever it comes from, can then go back into China.
The development of renminbi business in Hong Kong is consistent and has to be consistent with the pace of liberalization of the mainland. The agencies and regulators involved have to work very closely with the mainland, particularly the regulators, to ensure that this pilot is being done in Hong Kong is in a robust manner, and we have the sufficient firewall in order to ensure that it will not have a spillover any risks onto the mainland.
Yes, we managed through 2012. It's a challenging year. It's also not easy, but we're doing quite a good job. But we did not solve the problem, because in the Europe, still implementations are still the competitiveness of growth. In the US, the fiscal long-run overhang is still the big issue. In the emerging market, changing growth model is still a huge challenge. Looking forward, the challenge remains. Things are getting better. So I would say this year, I would say the risky is over-optimism. The most job for challenger is structure adjustments.
The regulators of China are trying very hard to promote its own capital market development. But I believe it takes time for China to remove all the barriers before its capital market can provide better and broader service in the region.
In the year 2000, Hong Kong, Shanghai, and Shenzhen probably had about 19% of the total of the sort of market that New York had, NASDAQ, and London Stock Exchange in terms of funds raised. But 10 years later, in 2010, these three exchanges in China, compared to the other three Western exchanges, raised a combination of 37% more than New York, NASDAQ, and London.
ACU, Asian Currency Unit, now probably becomes a very, very long-term possibility. I think it's important, however, to continue to pursue regional financial integration and cooperation, though, which is important to promote growth and stability in Asia.
The fundamental reasons, I believe, for greater development and integration of financial markets in our region are to harness the huge pool of savings, government, corporate, and private, and utilize this more efficiently for the investment needs in our region, thus allow cheaper access to a wider variety of funding sources. At the same time, of course, it will give rise to more business opportunities that should be of interest to all of us here. And I think it will give Asia a greater voice in the world regulatory dialogue, where the concerns of the North Atlantic are now dominant.